really the case for owning gold and the case against owning gold?
Well, the case for owning gold is pretty simple. Gold is one of the only assets in the entire world that has no counterparty risk. Almost every other financial investment has counterparty risk, meaning your financial success is contingent upon a party that you're trading with performing, whether it's a mortgage, you have a renter paying the mortgage, or you're buying a stock, it's the company making profits. Or if you're buying a bond, it's the interest being paid on the bond and the issuer not failing. That's all counterparty risk.
When that session about gold is done at a conference, I swear this always happens. It seems like there's some younger person in the audience where I can just see where they made a connection inside their brain that they have never made before in their lives. And that connection is, oh, well, maybe I should own some gold. Like it never even occurred to them before.
Right. Well, we don't have a precious metals heritage in our modern country
Right.
like most other countries have had. And that's primarily because gold was outlawed for private ownership between 1933 and 1974. Gold is the oldest, most trusted form of money in the world, going back to 2500 BC. King Tutankhamun's burial mask was made of 25 pounds of pure gold. And that goes all the way till the 30s. Gold was money and currency. They're two different things. Money is something that has value. Currency is something we use as a medium of exchange. We took the gold out of the currency in the 30s worldwide. Silver remained in the currency until the 60s and 70s. Now all we have is paper money. And what has that allowed the world's politicians to do? To explode the debt. Between the founding of our country in 1995, the U.S. accumulated $5 trillion in debt. Now it's 28 years later, and our debt is now $32 trillion. It's grown sixfold in 28 years. Now, that could have never happened when the amount of money that was out there was gold and silver coins, because you just can't make it at will, like you can print dollars. And this is why it's important for people today, especially in an inflationary environment where the purchasing power of your currency drops relative to the things you need to buy. That's what gold and silver are really good for, as a hedge against inflation and financial uncertainty. Gold is basically an insurance policy for the rest of your finances. If you have 5 to 10% of your assets in gold, you have a counterbalance against financial uncertainty. And it worked perfectly during the great financial crisis of 2008. The gold price went from about $700, $800 an ounce all the way to $1,900 an ounce when everything else was plummeting in value. And today, gold is back to around $1,900 an ounce, and it's holding up and tracking our debt quite well. Now, on the con side, well, let me just finish a bit more about pros. It's very compact also. 100 ounces of gold is worth about $190,000 today. It's the size of a paperback novel. You can put it in your pocket and carry it around, and no one will know that you have it. It's portable, transferable wealth that has no counterparty risk. Now, the con, in my view, is there's no dividends. That you can't make money on it as an investment like you can with a mortgage, with a real property that you can have a renter who will help pay your note down. Right. It doesn't pay a dividend. It doesn't pay a yield. It's just a lump of metal, but it's the most precious lump of metal on the planet for most people who understand value. Plus, it gives you immediate liquidity, which other investments like real estate, sometimes they're hard to sell if you can't get good loan terms or mortgages for the buyers. So gold gives you a host of things that most other assets don't, but it's just a lump of metal, but it's a really good lump of metal to have.
And, it's funny, Dana. Well, I think you saw this video a few months ago. I had a video shot of me unboxing gold, a shipment of gold that I bought. And, one of the YouTube comments was kind of funny. It was like, oh, well, this is why you don't have any money. I think they were just joking, but it's like, oh, because you're spending your money on gold. I don't know if everyone understands. Really, gold is about the best money that I can think of. So therefore, when one buys gold, they should perhaps think about it as what they're doing is they're shifting some of their prosperity from dollars over into gold. If I'm the United States, why don't I just print US dollars and have my central bank go exchange it for gold, or have Russia do that with the ruble, or China with their yuan, or Brazil with their reals? Just print the currency and then go exchange it for gold. And now your central bank's got more gold.
Well, to a degree, that has been happening. That's why central banks have been buying more gold, because they can do that to a degree.
Amazing.
Yeah, it is. But we've never seen our debt explode like we have since the great financial crisis. I mean, this is a game changer. And that's partially why we have this inflationary bout that we're going through right now, where inflation hasn't been 1 or 2% for the last 6 or 8, 9 years. Now it's got up to 9%. It's about 4 or 5% now, no matter how you measure it. But it could be stickier. So it's in a time like this, which is just a measure of the dollar and other paper currencies losing their purchasing power. We're all getting a financial haircut. Now, the good news is real estate is one of the best places you can be in an inflationary environment, because the value of land and the value of the improvements on the land goes up with the inflation rate. Well, that's what gold tends to do as well. But gold has benefits that land doesn't, and vice versa. Cash flow versus stability, portability versus no portability, liquidity versus sometimes there isn't liquidity. It's a good way to enhance your real estate holdings. And as you touched on earlier, it's a way to save your hard-earned gains in a quote-unquote currency that can't be diluted by more printing. So people should think of gold as a savings vehicle, not necessarily as an investment vehicle. It's just a good way to hold your hard-earned profits. And I know that you've had Robert Kiyosaki on your program before, and that's what Robert does. He takes his gains from his real estate and puts it into gold. And there are years where it doesn't seem to serve him so well, and then there are years when it's been very good to have it. And over time, it's a much better way to hold savings as opposed to holding dollars as savings.
I really appreciate that perspective, because it might sound a little bit coarse, but I tell people, hey, don't ever expect to get rich from stacking gold bars. It's not a wealth generator, but for wealth storage, it's difficult for me to think of anything better. So you might generate your wealth in real estate or in an active business. And with gold, we're talking about a stable, durable place to store it over the long term.
Right. Savings for the future.
It's really an old-fashioned transaction in a lot of ways, depending on how you store it. There's no login or password for you to take a look at your gold. But Dana, when we talk about physical gold, how do we know we're getting the real thing? Really, that leads us into, how do we know that we're not getting a counterfeit product? And you are a great person to ask, because you conceived of yourself and helped to establish the industry's anti-counterfeiting task force that today works with the Secret Service and Homeland Security to intercept curious merchandise coming into the country. I mean, you really know, but how can we know that we're buying the real thing?
It's a modest but growing problem. And it's a fact, though, that we have Chinese counterfeits coming in from China through various online sales platform. So you have to be very careful of who you do business with. That's really where the biggest mines can be stepped on. You don't want to do business with pawn shops or online selling platforms, because some of the merchandise is spurious. It is bad. So what has happened is, over the last 5 or 10 years, the various manufacturing entities, the mints around the world, and the refineries have added anti-counterfeiting design elements into their product to make it harder for the Chinese to counterfeit their product and make it look good. What the Chinese are basically doing is they're taking tungsten and they're plating it with gold because the density is similar. But that weight, for that weight to be right, the size is not quite right. So a dealer like me that looks at thousands and thousands of ounces of gold every month, we can tell immediately, oh, that's bad. It just looks bad. It sounds bad. It doesn't test right on our testing devices. Now, someone on the street who doesn't know what they're looking at, they won't know the difference. So it's mostly do your due diligence, buy from someone who's been in the industry a long time and knows what they're doing. And don't buy just because the deal's pretty good on one of these online platforms, whether it's a private trading platform or some of these auction platforms are not so well vetted these days.
You can watch this one next.